Good evening, people. It's your boy BMHD from the FOREX&YOU Academy. I'm back again with a recap in regards to GBPUSD analysis. So I'm just going to show you how I managed to use scaling down techniques, and so that I was able to get a trade, but overall, I hope everyone had a great trading day today. It's a Friday. I was off the markets, but I'll also show you another opportunity that you could have hopped on. But yeah, I'm not going to waste any further time. Let's dive straight into it. So right here, I have my GBPUSD chart. If you remember from the last or the previous video, well, not the last video, but the previous one, analysis on my GBPUSD. We anticipated that the market should break this level first to see it come back to the zone, right? And then we also had this prediction, and we also had this high. And the market, I believe the market was around here when we analyzed the chart the previous time, right? So I'll show you how I managed to get a trade at still London session, but pre-New York. It's not even pre-New York, but it was still London session around 11 p.m. South African time, So while the market was here, when I woke up, what I discovered is that the market is failing to make or break this zone here, because the market kept rejecting, and then from pre-London we had a strong bearish close. The market attempted to push bullish, and then bears stepped in. The market rejected, and therefore each candle closed bearish. And looking at the average of this candle, it covers all of these candles, of course, except for this one. But because I use scaling down techniques and I know how to measure or gauge the candlestick, each candlestick, and I know what suits me, so I was able to get a trade. So I'll mark this level here like we trapped in a range. So immediately after this break of this level here at 25,276, break and close below. As I always emphasize, it has to close, not just break, but close below. That's why you have to wait for the market, for that candlestick to close. So after this, I was like, okay, go back down to my scaling, go back down to my entry time frame, which was 15 minutes, right? So at 11 I was at my charts, right? Right here we can spot that this was the very last lower high that created this fake out, and it means a lot. That's why I was waiting for this level break, and then finally we had this break with the 15-minute candle close, immediate retest, and then immediate reaction from the market. So from this a bearish candlestick close, I was like, I'll put a sell stop at this point with the stop loss just above here, and my first targets were somewhere here. As long as for me, it depends what suits you, but I'm comfortable to take a trade that's at least 1:1. Anything below that, I'm not taking a trade. So this was at least above 1.5 the reward, so I was comfortable taking that trade, and I wasn't really risking that much. But anyway, I'll upload a screenshot now on my MT4 to show you how I managed to get the trade of GBPUSD and eventually hit my TP. But I know on my analysis previous video, I was like, we need to wait for the break. We need to wait for the break of this level here, being 24,853, in order to take the cells back to the zone. But using scaling down techniques, I was able to catch this move, you know, back to this lower high. So yeah, that was it for GBPUSD, guys. Coming back to GBPAUD, I'm going to show you guys how you could have managed to get a trade today, that being a Friday, you know. So we're going to start on a daily time frame. When you zoom out, you can see that the market has been pushing bearish for a very long period of time, right? And eventually we managed to make a double bottom, you know. And so far on a smaller time frame, we've been trapped in a range, you know. This zone here, I don't want to say level because it's not just one line, but I call it a zone because it's in between price, right? The market has been failing to break above this zone. Therefore, I'd say this could potentially be our neckline, coming off the thought that we have made this double bottom, coming back from the thought that we have made this double bottom, right? So therefore, I'd really say this level here would be our neckline to this double bottom. So of course, you know how double bottom works. After the break, and then we continue with the bullish move because it's a W pattern like this, you know. So on a smaller time frame, like I've said, we were trapped in a range, right? Let's go to your 4H. We are trapped in a range. The market has been touching or massaging this area here, but so many times I won't even include these ones because they're not that perfect. But you know, this is a range. Overall, you can see it is a range. The market is ranging. Let me just do this. We can see that the market is ranging, you know. Like I always say, candlesticks sometimes can be noise. So in order to just remove them, you can just see that we are trapped in a range, you know. The market is not breaking on either side of this levels, two levels, right? So that's why I'm saying you're trapped in a range. But not that the ranges are not tradable, you know. It takes a lot for you to trade them. You need to understand the psychology behind them, you know. So most of the time I prefer traders to stick with the trend, you know. Stick with the trend and not ranges. No, don't stick with the ranges. You need to stick to trading the trend. Only then will you trade ranges, when you understand them, you know. So yeah, this is what I prefer, trending markets, because they move and you know what to anticipate next. Okay, so right, this could be a trade, a potential trade for someone like you out there wanting to trade this range, right? You wake, depending on when you wake up in the morning, but I wake up early as 5, you know. So you wake up in the market after this very bearish momentum candlestick, and it's your 7 o'clock close South African time. It's a strong bearish candlestick. So it indicates that, excuse me, bears are in the market. Excuse me, these hiccups. It indicates that bears are in the market, right? And I'm going to mark this level here. That price has been failing, not once, but all of these weak rejections here, you know, they mean a lot, because price is failing to break below. It has attempted, but it failed to break and close below. And finally, before the London session opens, we do manage to what? To break this level at 77.361 with a strong bearish candlestick. So now we've gotten the evidence. Like I always say, we start to build our story. We've got our resistance. Price has been tapping in that resistance within the range for a very long period of time. The markets have been pushing bullish within the range previously. So we've reached our top and we got that reaction, which is our evidence, and we've broken a level at 77.361. So that says a lot, you know. We can only start to look for sells going ahead. From here, we scale down to our entry time frame, right? I like to use the 15 minutes. So now recall that candlestick close was around 7. So let's see where 7 a.m. is. 7 a.m. is somewhere here. Yeah, this is the new candlestick. This is the new 4H candlestick. So what we anticipate is that the market will continue with that momentum that it has started, you know. So you can see, scaling down on your entry time frame, price is creating levels in the market that it was failing to break below as well, but eventually we got that break with a strong 15-minute candlestick, and this was the 7 o'clock close. So coming to the charts, we wait, you know, wait for a retest. It's either going to come back for a double top, of which we did, because price did tap in here, but with a rejection, right? So from 7 o'clock, you mark this level again, right? Price does as you should wait. It does what it has to do. Then eventually you get your 15-minute candlestick break, which still indicates that sellers are in the market, and you are printing that lower high, lower low, lower high, lower low, you know. So immediately after this candlestick close, you just enter the market and put your stop loss just above the structure. It could be above it just to be safe because of this wick. And then you go to for your 1:2. That's it. That is it. That would be for today, guys. Anyway, I'm signing out, your mentor, your favorite mentor from the one and only best team, the Forex and You Academy, BMHD, signing out.